Yeah, happy Thursday, everybody. Happy Thursday, and welcome to the Dollar Hour. I am Deontay Burton, aka Mr. Short Dollar himself. We got an awesome show planned for you guys tonight because it's dealing with a subject matter that I know everybody has to deal with, and that's insurance. So we're doing an Insurance 101, your complete guide to understand insurance, because I know a lot of times people have certain terms like claims, policy, insurance, policy holder, things like that. But I want to go through everything, break down, give you the terms, explain it to you in layman's terms. And if you guys have any questions about it, feel free to call in. I can explain it to you. Most of you guys know I'm an accountant by profession, but in being an accountant over 25 years, 15 of those years, I cut my teeth in what's called insurance accounting. It was a little different from regular, general accounting. Insurance accounting, if you just think about it, insurance deal on what we call policy years, not calendar years. I'm not going to go into all how complex that is, but it's a different way of accounting. So I'm a little versed with the insurance industry because, like I said, I spent that time working for somewhat of an actual insurance company for 15 years in insurance accounting. So I have a lot of experience with insurance. So, I did want to just have this segment tonight because, again, there are a lot of people with a lot of questions about insurance, exactly what it is, how it's done, how prices come up, why things go up, why things go down. So again, tonight's show we're talking about Insurance 101, your complete guide to understanding insurance. Before we get started, again, I am Deontay Burton, aka Mr. Short Dollar himself. This is the Dollar Hour. Want to say what's up? First, say what's up to my awesome producer, DJ Lab.
What's going on, brother? It's Thursday.
Man, what's happening
Best
with
day
you?
of the week. You brought the rain with you, I see.
Hey, man.
It was 99 degrees before you came through here. Then the rain came through with the thunder and the lightning.
Hey, my bad.
But other than that, it's just a good day. How was your weekend?
Weekend was cool, man. Weekend was cool. Big shout out to my son, Chris Burton. Yesterday was his birthday. He turned 18 yesterday. 18.
Can't tell him nothing now.
A list of the man is what he wants to do.
Oh, a list of the man.
Yeah. So, it was cool. We did a little. We were supposed to went out yesterday for his birthday. He wasn't feeling the best, so we did a couple cupcakes and stuff like that. And shout out to my ex-wife, let me come over there and sing happy birthday and stuff. She could have kept me. Let me stop my shit.
Right. Cynthia McCray said hello from St. Louis.
Hey, what's going on, Ms. McCray? How you doing?
She said medical insurance is what she's dealing with.
Awesome.
Okay.
Well, listen, man, I think we have a great show. We started going through everything and stuff because I'm super excited about talking about this subject because I know a lot of people think they know, but they don't know until you have a situation come up, i.e. prices go up, i.e. get dropped from certain coverages and stuff like that. You really don't understand the different parts or different branches of insurance, okay? I also want to say what's up to my other producer, Slick316. What's up, Reek? What's going on?
What's going on, Reek?
Right now we're streaming live on Facebook, YouTube, Instagram, LinkedIn, TikTok, and Twitter. Again, Instagram, Facebook, YouTube, LinkedIn, TikTok, and Twitter. If I might have said it 2 or 3 times. The call-in number is 678-740-9894. Feel free to call in if you got any questions about insurance or you want to add anything to the conversation. Again, the call-in number is 678-740-9894. We're talking about Insurance 101, your complete guide to understanding insurance. Right with you, before I get running my mouth, with all those platforms we're streaming on, the main platform is the Mr. Short Dollar YouTube channel. So whatever platform you're looking at, be it Instagram, Facebook, TikTok, whatever, go to Mr. Short Dollar on YouTube, subscribe to the channel. That way, if you have to leave in the middle of the actual feed or anything like that, you can come back to the YouTube channel and check out the video in its whole entirety. Also, we got over 700 videos on the YouTube channel for you guys to take advantage of with all the great information. With that said, we also released the remember a couple weeks ago, the July 2023 grants. We did the grants for best grants for veterans. We did over 14 different grants and resources for any veterans want to get in business. Also, yesterday released 2023 best grants for women in business, small business grants for women. There's 10 different grant opportunities. So a lot of great information on Mr. Short Dollar.
Yeah, you just gotta go get it.
Hey, just gotta go get it.
You be on YouTube anyway.
Hey, before I post the link, go check out the video.
Right.
What they ask me, damn, I tell you.
Oh, got a call.
Fast. Thanks for calling the Dollar Hour. Who am I speaking with?
I just wanted to make a quick question or say a quick question. Is it possible for someone to be overinsured?
Well, okay, good question. The question is it possible for anybody to be overinsured? The question is,
Thank you.
no, that's fine. You're quite welcome. Are you going to stay on the line? Because I got to ask a proper question.
Okay.
Okay, the reason why I asked that when you want to is being overinsured, number one, looks at the question you got to ask yourself, what are you insuring? And what I say, when we look at insurance, insurance is pretty much used to replace items, right? So if something get damaged, something get broke, we want to restore it back to a normal whole self, right? So when you say, are you overinsured, the whole point of being overinsured, if you just say, listen, at the end of the day, you're only going to be getting X amount of dollars from a certain thing. So say there are certain, let's take health insurance. Health insurance, you can have health insurance from two different entities, maybe your job, maybe a spouse job. The health insurance is only going to cover so much. They're going to have a ceiling, depending on one insurer. They're not going to come with one and then another one comes back and paying. Typically, the person that's the one whose birthday comes first, that's who the insurance will go up over. If you say to yourself that, listen, I want to cover a certain item, i.e. a house, i.e. a car, whatever, the insurance companies are only going to pay so much. And if they see more than one policy, because they share databases on a universal scale, certain things are only going to get covered so much. So you can't have multiple policies on a property, multiple policies on a car. So when you say overinsured, it really depends on what you're trying to do. Now, you have multiple life insurances that can cover certain things, because, theoretically, we had videos before where we talk about life insurance to replace you. So if you got a separate policy outside of your job, just say for $100,000, then your job, you got another $100,000, that's $200,000. It really depends on what you're trying to do. If you're trying to replace your income, cover certain bills in the event of the demise or something like that, that's fine. But it's just a question depending on what are you trying to do. Is it possible to make sure if any kind of loss is incurred that it can cover that loss, and also that the amount of money that you're paying in the insurance premium, because there are times you can be paying a certain amount of money in premiums and it wouldn't make sense in the grand scheme of things, i.e. gap insurance. Like you might have gap insurance. A lot of times people get gap insurance, and let me know if I'm going too fast or I lose you, please, because I know how I get. If you have a situation like a gap insurance, when you buy a car, sometimes they'll include it with a car purchase. I always tell people, don't get gap insurance when you buy your car, get it separate with your insurance company, because gap insurance is the difference between the loan amount and the value of the car. And we know as the longer we make notes on the car, the loan balance is decreasing along with the value of the vehicle. So at some point, you still want to be paying gap insurance covering the difference that may have been when you bought the car $3,000, but now you're in year 3. The loan balance and the actual value of the car are the same, but you're still paying a note with that stuff included. So those kind of things doesn't even be beneficial, because you can get gap insurance on your car by itself outside the loan, and in year 3 you just drop it because it makes no difference because there's no gap. So those are kind of instances where it may be overinsured because you want to be able to recoup the difference. So those are kind of things, but it's a case by case basis with doing it. I don't think I would advise people to do is just sit down, do the numbers, talk to somebody that's credible that can give you advice. Don't talk to your friends just gonna get their opinion that doesn't really know, but get some credible advice and try to map things out and make sure the math makes sense. Did I answer your question?
It does, and I was referencing life insurance, and you answered that when you mentioned the premium. Thank you.
You're quite welcome. I appreciate you calling in. That was fast. That's a good question when you ask about being overinsured with certain things and stuff like that. And I'm going to share even some things even with me with insurance. Again, we're talking about Insurance 101, your complete guide to understanding insurance. And I get a quick story with that said with myself. When I was younger, let's say when I was 25, I had $500,000 in life insurance. Mm-hmm. Just thinking about that, because I had 2 kids. I think 2 kids, maybe one away, but I was a young father, and I carried that much life insurance because in the event something happened to me, house note, kids, tuition, things like that to be covered.
Be taken care of.
Exactly. So it was 20-year term policy. 20-year term. We're gonna go over those parts of it. The terms just mean the actual periods, how many years It was. So 20 years expired. So fast forward to 45, when that policy expired, I reduced it to a $100,000 policy.
Okay.
Because I only had one kid. But I'm looking, he got 3 grown brothers.
Right.
At my lifestyle had changed. I got a little bit more change in my purse and things like that, so it didn't need it. Assets were, I didn't have to do that. So again, if something happened to me, hey, y'all can sell this and do that and all that kind of stuff. You probably in a better spot than that $500,000 policy.
Okay.
That was my thought process with it. You know, I don't need to be putting all that kind of money out because the older we get, the more expensive we're gonna get.
Right.
And I'm just like, look, I know y'all can do that, but just bury me and y'all some little funky damn flyers. You know? So my thing of it is just like, look, I done gave you way more of information in between your ears, so we don't have to really go through that as much. So that was just my thought process. So we started looking at, that was an honest assessment that I did with myself in regards to just having, you know, life insurance. And a lot of times people don't think about it, but we always talk about that. And check out, if you guys get a chance, how much life insurance should you be covering. I did that video about a couple of years ago. But we theoretically remember life insurance is to replace you as a person.
Okay.
You know, it's to bury you, but also replace you because
you and your income.
You and your income and your income, future earnings, and cover out certain debts. Because like I said, I wanted to make sure if something happened to me from 25 to 45, okay, house taken care of, the boys' tuition and all that kind of stuff. Now, if you booger this up, that's on you.
Right.
But I was gonna make sure that was done. Now, everybody grown. You know, y'all can help your brother. I'm giving you this, giving you that. You got. There are other assets in place where, you know, you can take advantage of that kind of stuff. Just a different spot in life, so I didn't have to look at it. Because insurance was all I had then.
Okay.
You know, so there were no other assets or anything like that to move around or anything. So it was just a different thought process. But I always tell people, make sure you talk to somebody credible to give you some good advice and bounce the ideas. There's nothing wrong with bouncing the idea against
not somebody who think.
Yeah, shit. Yeah, I believe. Like,
right.
Bad spot, my brother. A bad
I believe spot. You should try this. Have you tried it? No.
And again, so guys, we talk about insurance 101. So what is insurance? Insurance is a risk management strategy designed to protect individuals and businesses from financial losses that may arise due to unexpected events or risks. Okay, so just again, things happen because, you know, we have something going on called life, and in the event something happens or something throws off, something damaged. Hey, Trey Nicole, how you doing, young lady? Appreciate you tuning in. So in the event something does happen, we have insurance to kind of replace that particular thing or mitigate or, you know, shorten the loss that we may have. It involves transferring a burden of potential losses to an insurance company exchange for regular payments, also known as premiums.
Okay.
And right now we're going to break down some of them key components of what insurance is. And again, guys, if y'all got any questions regarding not just the information we talk about, we want to stay on subject about with insurance. But if you got any questions about insurance and things like that, your boy's well versed with it. Like I said, I'm an accountant, but I worked in property liability, workers' comp, health, you name it. I've been in those fields. We're doing it. You know, that's for a long time.
Right.
So I'm a little versed with the products. And I can't say and tell you what State Farm going to charge you for this, that, and that.
Right.
But as far as getting explanation on certain products, I got a good idea of certain things, okay? So one of the key things, the first thing we're looking at is the policy holder. That's the person that's insured. And the policy holder is the person that actually gets it. That can be a person, that can be a family, that can be a business. And typically, you know, when you're the one that's holding the policy, that doesn't mean the policy is on you. You might have it on someone else, like your children. Like, you know, you say you work, sometimes you can be insured, you cover your spouse, you cover your children. You may have a parent or something like that, but you are the person that owns the policy.
Okay.
You know what I'm saying? Yeah, you got to have some kind of vested interest with doing it. You just can't just say, well, look, man, my neighbor, he walk around a little pretty damn sick. He probably dying another year or two.
Go get some insurance.
Yeah, exactly. You got to have some kind of vested interest in this person to be able to do it. Now, you can be a caretaker, life partner, whatever, you know, or have some kind of relationship with, but it has to be something tied to it. You just can't get insurance on certain things. But again, it could be for the person, it could be a business, whoever can, I mean, not for, but the person, the individual that's acquiring it. Because it can be a business with it. Just like my accounting firm, you know, we have what's called Errors in Omission. You know, we're the policy holder of that. We own that. any kind of mistakes or anything like happen, we own that. With doing it, same thing, just like rental properties. You know, we have, you know, again, a tenant may have renter's insurance. We have liability insurance just in case of fire, break-in.
Right.
There you go, dwelling insurance. There you go, appreciate it, Larry.
Yeah.
Those kind of products there. So that's, again, the policy holder is the person that is insured that that owns that particular policy. The next being insurer, i.e. the insurance company. That's the person that's actually offering the coverage of the insurance. They're the ones that assume the risk with doing it. You know, you're going to have you're going to go to them and tell them exactly what you have or what you want to cover, i.e. a person, i.e. a business, i.e. an event, whatever. And from that point, you'll just say they'll have a conversation with you to find out what is the actual risk or the amount of coverage you need or what needs to be protected. That's why a lot of times, you know, when you buy your home, they'll pretty much, you might have bought a house for $100,000, but you cover maybe for $300,000 to $400,000.
Okay.
Because again, you know, we have something called help me out, Lab, when the appreciation of the actual value of the house may be more. So you know, they'll do different assessments or whatever.
Okay.
But if you bought the house for, let's say, $100,000, and then, you know, just say repair costs, like we know that lumber and a lot of things went up a couple of years ago. Those prices shot up.
Right.
So if you actually just went off what you purchased the home for, and now the value is $400,000, you're not going to be able to get the same kind of repair costs with that because everything goes up.
Right.
Not only did the value appreciate, but we all know the cost of living and everything else goes up. So the prices went up with that as well. So that's why, you know, you typically will see something insured more with that. Just like in your car, with your car insurance, typically it's going to be insured for more than what it is. Even have attachments like medical and things like that.
Yeah.
They're actually going to
motorists and
exactly.
Yeah.
So that's, you know, that's what the insurer is. That's the actual insurance company. Guys, feel free to call in. The number is I'm about to forget the damn number. 678-740-9894. Again, the number is 678-740-9894. Feel free to call in if you got any question regarding insurance, something run across your mind. You know, as long as in the lines of that, you know, just you got a quick question about, that'd be a quick question, just a question about, feel free to call in 678-740-9894. You just talked about the policyholder, the insurer being the company, and the next is the premium. Now, I know a lot of times people hear the word premium, and the funky thing about insurance is that when people a lot of times have to get insurance, they just look at costs.
How much it's going to cost me a month.
Yeah, but they never really sit and get into the actual, what is this, what is that, why they come with it. And a premium is pretty much the amount of money the policyholder is going to pay the insurer regularly. That might be every month, every quarter, semi-annual, however you do it. And that's to maintain the actual insurance coverage. So again, keep in mind that when you hear the word premium, that's what you're going to be paying the insurer to cover you.
Isn't that the maintenance of the policy? They call that, don't they use the premium as policy maintenance fee?
I don't know that the maintenance fee, the insurer, that's just really the cost you're going to pay to get caught in that, you know, to keep that.
I thought they called it the maintenance fee, and I could be wrong because they that's what they charge you each month to maintain that policy to keep it open. I guess.
Well, that may be part of the premium.
Okay.
That might be part of the premium. The premium just, you know, whatever that part, like they said, if you got $100,000 policy, they're saying that you got to get paid on an annual basis $3,000. And you can 36 for easy math, $3,600, and they say you need to give us $300 a month, or however you want to do it a quarter, whatever. So the actual maintenance cost probably is tied into the premium.
Okay.
You know, and when they come with whatever the premium is, that number is brought in by different factors. Or, you know, risk factors, that being, you know, if it's health insurance, your health, you know, a lot of times you see where they give you a physical. You see whatever it is, that take that profile of where you at and kind of just make a risk assessment from there. When you get your car insurance, they're taking that factor of your driving record, the color of the car, your zip code, all that kind of stuff to take into consideration. You get basic liability insurance for your business, what industry you're in, common errors, a lot of stuff is taken into consideration with doing the thing, with doing it. I always say, if you're looking to get in business, have some kind of broker on deck where you can kind of figure certain things out. Because I'm gonna tell you something, lad. There are certain industries that people don't think about until they have to get into it, and damn insurance be astronomical. Especially when we start looking at medical, daycares and stuff like that. Man, that stuff crazy.
Right.
And you think like, okay, well, it's one thing to be working in a certain place for a certain amount of years. You're great at doing that, but we start getting those operational costs together and stuff like that. Some of that stuff be astronomical, and you don't even know it. You know what I mean?
Yeah.
A lot of folks really underestimate, a lot of the actual fees, that get associated with it. So,
especially when you're a small business owner, you're trying to open, the fee. Like when I used to manage shopping centers, we would require, no matter the size, to put it on the box of the store, the size of the store. The minimum would be, and that could be just an 800 square foot of space. We will require a minimum $1 million policy.
Yeah.
Because you have certain things that goes along with that store. Not
Absolutely.
only the dwelling itself, but people falling, tripping, all that in front of the store, falling in the store. So we would require a $1 million policy on the store itself, not including what we already have on the shopping center, but the store. To even lease the space, we had to see that policy.
Yeah. What's up, Chris? My son, Chris B. And we just say you just came in late, son. We just say happy birthday to you.
Happy birthday, Chris.
We just say happy birthday, my baby boy. That's my boy Chris. That's my third son. Happy belated birthday, bro.
That's right.
But to that point you just said, well, I was just mentioning about, coming in and make sure you got so much coverage. Lawsuits real. Lawsuits are real. So you got a lot of people that are sitting in the bushes waiting to trip up or fall in the hole or do this, my neck and my back. Shit. All kind of stuff. We're doing it. And just knowing, okay, look, if the FedEx truck hit you, I was sitting at intersection going through it, and the FedEx driver was turning on the street, and I'm thinking to myself, in her mind, she probably like, get the hell out of my way, I'll run over you. In my mind, I wish you would. I am rolling out of this car screaming.
Right.
I'm just sitting there like, I wish this damn just to tap my car. Tap my car.
Just a little bit.
Game over. Game over. Cause I'm talking, we call it a stretcher, the wrecker, every damn thing.
Right.
I man, and I know in her mind like, look, you holding me up.
Right.
Okay.
It's about to go down.
I'll sue the shit out your ass.
It's gonna be Poochie X.
There you go. And that is the premium. Like I said, pretty much, guys, that premium is the actual amount that you're gonna pay that the policy that you have to pay the insurance company to actually hold that insurance. Again, like I said, that numbers came up with for that premium is based off several factors that can vary from person to person. Me and Lab can have the exact same car, same price we bought it for, but our insurance premium may be different because based off the risk profile that we have. And everybody has a different risk profile. And people have to understand that,
Isn't that attached to your credit too? Think about that.
I don't know. I don't know. I've heard certain things. As far as it's been attached to your credit, but I don't know that for sure. But I do know at the end of the day, when you have certain claims already based on it, the industry, driving records, health records and stuff like that, that can be, it changes a lot. That's why you see a lot of times companies right now, they try to give people incentives to join gyms and stuff like that because premiums are through the damn roof.
Right.
So you can see everybody, people may be prevalent with heart disease, diabetes, blood pressure and stuff like that. So when they looking at it, you can't discriminate nobody, but they looking at it like, look, man, we're paying like the astronomical costs on the employee side to pick up that. You're gonna be paid like it gotta make sense to do this. So that's why they try to get those incentives. Not they really. I'm just be honest with you. I don't think any of them really care about the actual well-being of the employees. Health or anything. Well, let me change that. But for the most part, a lot of them incentives are given to reduce actual insurance premiums. Okay, remember that's the premium is the amount that you will pay the actual company, right? Anybody got a question? Anything?
Slick says that they didn't used to pull your credit, but now they pull your credit at MVRs for the insurance.
Yeah, well, I know you got to put an MVR.
Say hey to your mama.
What's up, mama? What's going on?
Facebook.
Mama Facebook, hey mama, what's going on? She checked me, but I ain't catch her last time.
Oh, okay.
I told her she called her late. She came switching over and everything. So that was insurance premium. The next part is actual insurance policy. Remember what I said, guys? If whatever platform you're going to, you can always go back to Mr. Short Dollar. Chris said, thank you. You got it, bro. You can always go back to Mr. Short Dollar on YouTube to check out the video in its entirety if you came in, in the middle of the show. So we already went over the policy holder, the insurer, the premium, and now we had the actual insurance policy. And the insurance policy is a legal contract between the policyholder and the insurance company. It outlines the terms, conditions of the insurance coverage, including what's covered, what's excluded, the limits of coverage, and the responsibilities of both parties. So you ever get a chance to look at your actual insurance policy, a lot of times you'll be able to see, you don't have to even think about, you can know exactly what's covered. Because so many times what happens, we assume. You know what I'm saying? We got into that fender bender. Now we're finding out, hey, listen, I didn't have enough to cover this.
I'm not covered.
I thought I had roadside. That's a big one.
Right.
I thought I had roadside. I thought I had rental insurance just because I got in a wreck. All that stuff is outlined in your policy. You'll be able to see that. But far too often we get rushed when we're trying to go through certain things. And what I said at the beginning, we're so concentrated on the cost of the premium.
The monthly premium.
Just say, and we'll just ask a simple question. Is it fully insured or is it liability? And all the other shit that we may need to come along with it, we're not even thinking about it or try to do any kind of due diligence to make sure it's there. But we just say, look, I can't afford this. This is what I can afford. And they say, look, I can get it down to here, cool, run it. Now again, you might got a shell of a shell. It may be full coverage.
Lady Line Lady Love, you came in late. We did discuss life insurance, and we probably double back to it. But you came in late. Got to come at the beginning of the show when it starts. But we did discuss life insurance.
You got to make sure you go to Mr. Short Dollar on YouTube and check the video out in its whole entirety.
Right.
That. And I appreciate you, Line Lady Love, tuning in and everything. But that insurance policy is a big thing because a lot of times people really don't take the time to look it over. Because again, like, look, I can't afford that, but 2 or 3, can you get it down to this? Can you get it down to that? I've heard it. I felt it. Hell, I had to say it before at different times. And you don't really think about it to what? Your ass get burned.
Until you need it.
Like, damn, man, I ain't got a rental car. No, you didn't have that on there.
Right.
Or you didn't have certain things. You're like, what do you mean? And a lot of times, man.
I think people get confused when they say full coverage. They think, and I learned this from Slick, they think that full coverage is full coverage. Like, it covers and it doesn't. It doesn't necessarily cover rental cars. And, and when Slick was getting insurance, she was like, man, I always make sure my such and such, this. I ain't never thought of it like that. I ain't never went through a policy like that. I always just point and click. Give me that. Thank you. Walk out the store.
I had a tenant. I had a tenant one time that was I'm not a tenant, accounting client that was based, I think it was in Griffin, whatever, but I remember they owned all these. It was an area of like different quads. They were renting property, but they had each one had like 4. They had like 12. So long story short, they had just put these AC units. Guy hit them up, tore all the copper out. And I remember the guy was telling me, what's going on, Brother Dent? Appreciate you tuning in. I remember the guy saying, look, I felt pretty cool because he knew he had what? Insurance on it. Come to find out, he had the actual, the dwelling covered for fire, storms, and things like that. But he didn't have it for theft.
Oh.
And they didn't put that on there. So you talking about 4 or 5 units. And I think 4 or 5 units, and the whole auto copper was out. Shit, now you talking about maybe $10,000-$15,000.
Right.
And all this stuff is sabotaged, and they got to come out of pocket for that.
Because he didn't have coverage.
Man, he had to just damn, eat it and lose his cribs. You know what I'm saying? This ain't like recent stuff. This is like early 2000, maybe 2010 the latest.
Copper and stuff out of
exactly. But going back to the policy, he didn't have it on there. He just thought because I had full coverage on it, that it was covered. But they told him theft would have to be an added addendum. That's the actual update that you have to put on there. Typically now, because there was a big fallout with a lot of stuff, a lot of time, most of them have that on there. But it is a main thing, guys. I will tell you, if that's a rental property, you better make sure you got theft on there. Because if somebody break into your house, don't assume that because you got a mortgage with insurance on there, that theft is on. Make sure you check that. So I just want to let everybody know that if you haven't, to check to make sure theft is on there, because somebody can break into your house and certain things ain't covered. Just like certain things with storms, it may just be.
That's a tricky one
yeah,
right
yeah,
there.
Yeah, well, that's what I'm saying.
Tricky with that.
Yeah, but that's why I say you need to just have them conversations with that. You know, hail, wind, lightning, things like that. Some things are covered, some ain't. But you know, again, we can get caught in them numbers and miss out on some things that like you don't think about it till it's too damn late, or till you stuck with something that you can't get fixed.
On that rain and stuff, you know, those insurance companies tricky on that. Cause they'll say if it floods, they'll say it's a natural disaster. You like, no, the rain caused the flood. It didn't just start like, you know what I'm saying?
And it all depends on who you got on the phone.
Right, right.
That shit really depends. When you start trying to explain and argue, man, whoever you got on the phone with you, that's the thing about it. Because like I said, man, in your mind, you actually got full coverage, but it is deemed under the law with the basics.
Mm-hmm.
But them other things like theft, certain storms, certain fire, and shit ain't all on them.
Mm-hmm.
You know, even after 9/11, nobody had no coverage for damn planes running to buildings. So a lot of folk got ate bad with that, you know. So a lot of things we got to kind of think about. What we have now, we have something called mass shootings.
Mm-hmm.
All this stuff, man. Look, think about that kind of stuff. So depending on what you're trying to insure, trying to cover, it's very, very important that you make sure that you look at your insurance policy to make sure you have everything covered. Okay?
Yeah,
you about to say something later?
Lion Lady Love 2 says full coverage is not what it used to be. Higher amount of the premium, the lowest the bill. My deductible is $1,000 and my house's deductible is $2,000. So she's saying it's not what it used to be. They've changed up some things on the full coverage. Slick says that a tree went through my aunt's house, and that's true. A tree went through her aunt's house, crashed the kitchen, everything. This is house insurance, house insurance, and it still wasn't enough to fix her house. There were certain parts of the house that didn't get fixed.
Well, you know, I just went through that 2 years ago.
Right.
Well, they just finished. It took them over a year to do the repairs.
Right.
Fortunate enough, I was able to cover everything and stuff like that. But again, that goes back to what I was saying earlier. You got to be an assessment because if you got a house that you deem, and they may or may not send assessors out there to look at your house because you may have a dwelling. Because I know my rental properties, I think they go out every 2 years. Mm-hmm. They'll send somebody out there to just see, okay, like, is this roof fine? If they see certain things messed up with the house, they'll send me, hey, listen, we're going to give you about 2 months to get these repairs done. We're going to drop your rental, the insurance on these rental properties. You got to get certain repairs done. So if you have, you know, coverage for $75,000 on something, and you know, listen, you know, we've had inflation. We've had updates to actually the value and stuff like that. It may not be covered. So you got to make sure that you be savvy. That's why I want to have this actual show. Because a lot of times people just don't know. They think they know. Mm-hmm. Because when you hear terms like full coverage, it's going to cover the full thing. No hell. There are caps on everything, right? So we need to make sure we kind of verse with that. And again, guys, if you don't know, find somebody that can help you. Find somebody that can help you because most of the time, again, we go into it what we can afford. And be prepared for the answer. Like, okay, cool, we can update it, but it's going to be $300 more in your insurance. I can't afford that shit. Hey.
That's what you asked for.
Hey, what I'm just saying, right. You got to be realistic, you know, we're doing that. Sometimes you can't afford not to pay certain things.
Right.
If that makes sense. But I dig it. I understand everybody got different things going on, but, you know, you need to try to make yourself as equipped as possible with all the information that you need. That's what we want to be able to do. We homeowners, we're looking at health insurance, we're looking at car insurance. We want to be able to gather as much information as possible, and then we can make decisions about what we do and what we don't need, right? You know, so that's what I want everybody to be thinking about. Again, tonight's show we're talking about Insurance 101, your complete guide to understanding insurance. This is the Dollar Hour. We're streaming out live on Facebook, YouTube, Instagram, LinkedIn, TikTok, and Twitter. The main hub is the Mr. Short Dollar YouTube channel. You can Google it. You'll see this handsome face pop up. Subscribe to the channel. So even if you came in the middle of the show, you can go to the YouTube channel, see the video in its entirety, and also all the other 700 videos on the YouTube channel. The next thing we're going to go over is basic with coverage. So people hear what's covered. And when you hear the term coverage just refers to the protection provided by the insurance policy. It specifies the type of losses or risks that the insurance company will compensate the policyholder for if they occur. Different insurance policies offer different coverages based on various risks, such as health issues, car accidents, like we talked earlier, property damage, and more, right? Especially a lot of times you get in business, depending on what type of industry you got. Okay, let's start thinking about, like, you got a club.
Cool, nightclub.
Yeah, a nightclub. where they got shoot 'em up, bang, bang, they tear the club up.
Right.
You know, those kind of things. Restaurants with fires and all that kind of liability. People slipping and falling and all that kind of stuff. Daycares and stuff where you can got kids can get injured. They may have an attack. Excuse me, certain things. That stuff is through the damn roof. And again, if you get into it, like, look, I can make some real nice. My pie's kind of like patty pie, and that's your thought process of getting into this shit. You ain't really thinking about.
Right.
Hey man, look, all this other kind of stuff.
Right.
And coverage is something else. And sometimes depending on your risk profile, again, that risk profile being, you know, just looking at all the things in regards to your health, your industry, what we said, motor record, whatever. So they may not cover certain things.
That's true. Lion Lay Love says during the freeze back in December, people's pipes were busting. That wasn't included in the coverage.
And that's something. And that's something. But see, the thing of it is just you could have got it updated, but you don't think about doing it.
Right.
Why? Because in the state of Georgia, you don't typically look to get a freeze addendum or something like that.
Right.
But it'll be, say you go up north, those things happen, you know, maybe a little bit more common.
Right.
They're going to have that thing. You know what I mean? Right? So typically they'll offer certain things that are actually regionally more common with doing certain things.
They got that problem here, the pipe busted here.
Yeah, well, I mean, shit. I was there the other day.
And they're doing that freeze. And, yeah, luckily she has an uncle that does that plumber. So it wasn't that big of a deal. But, yeah, it was at first.
A lot of stuff we don't think about.
Right.
It's just like if you're staying on the coast, let's say in Florida, California, you're going to see more hurricane policies and things like that. You may see some flood. You probably see more if you're near like flood zones. Insurance things covered with that and stuff like that. But outside of that, if you're not near a flood zone, near an ocean or a lake or anything like that, a flood addendum, that's not going to be put on there.
Right.
You know, and if you have like a creek or something across the street that you're not thinking about, you got to bring that to, you know, the insurer's attention to do that. So that's the thing a lot of times we don't think about, but when it happens, it hurt us bad.
While you speaking of the floodplain being close to Florida, you know, something I found out recently, and I thought about it, but I didn't really. They confirmed that insurance companies have insurance companies. You get what I'm saying? Because in Florida, the insurance company is pulling out. Farmers is pulling out, like Lion Lay Love says, because their insurance won't insure them for Florida.
Yeah.
So they have no insurance companies. It's all state funded now.
Typically the way insurance, I mean, this is not what it shows, of just knowing. I work for an insurance company, and we were a self-funded insurance company. Typically the way insurance companies are funded is that they'll get all these different brokerage firms or whatever that actually specialize in funding insurances, and they'll take those actual premiums that they have, pool them together. They may be different other insurances together, and get them put in different brokerage firms, and get, you know, they need hundreds of millions or billions of dollars to kind of do it, because at the end of the day, if you start looking at it, 9 times out of 10, most people are not going to have a catastrophic loss with a car accident or fire, things like that. But you got so many people paying those premiums, they can take that dollar amount, put in certain brokerage or vehicles or whatever. It's growing at enough that the actual dividends or interest rates that the actual product is growing at is going to be much bigger than the actual premium. When they're writing bad policies, i.e. the people that have, you know, a history of losses, a history of tickets, things like that, that's when things kind of work against you.
Okay.
And that's where we're going to get back to those actuarial people, those people that actually focus on those kind of things. We're doing it, but typically on the bigger scale, they'll have saying they insure it, you know, those, that's how a lot of them self-funded. I know when the company I work for, we dealt with most of the counties in the state of Georgia, and that's how we self-funded. We're doing that. We just use certain, you know, there are companies out there that actually help pool in those particular funds, and actually, you know, just the amount that's invested, those actual disbursements, the interest or the dividend from that, is usually can cover, most of the time, can cover your losses on an annual basis.
Okay.
And everything we're doing it. But it's just a funky way they can take this profile, get the right amount for you to pay in the premium, and it'll work out. You know, we're doing that and stuff like that. A lot of math. Hey, parents, if your kids do math, you need to push them.
Right.
They pay a lot of money. And I know damn well them guys didn't do a whole lot of work.
Right.
They get paid a lot of money to do 1 + 1. The next thing we just talked about coverage. The next part is deductible. And I remember me and PJ had a little fender bender about a month ago. We was just talking a little while ago about deductible. And he was like, "What is this? What is that?" And, I went through the whole little one-on-one with him with that. But in essence, I know a lot of people, when you buy an insurance, they'll tell you, like, what Line Lady Love said, typically the higher your deductible, the lower your payment. The lower your deductible, the actual higher your payment may be with doing it. And so what a deductible is, the initial amount the policyholder must pay out of pocket before the insurance coverage kicks in. For example, if you have a car insurance policy with a $500 deductible, you have to pay the first $500 of repair costs for your vehicle, and the insurance company will cover the rest up to the policy limit. I say again, up to the policy limit. So again, the deductible is the first amount that you will pay towards that coverage getting kicked in. So you have a $500 deductible, you pay the $500, and then the actual insurance company will cover the rest of it up to that cap that's already written on that policy amount. Pretty simple.
Yeah, you know what? I wasn't very versed in insurance. I'm going to be to her credit. Slicky versed me on this insurance because her deductible is $0.
Okay.
And I was like, why would you? And she showed me one time her car got broken into. They stole all her stuff out of her car, and she called the insurance company, and within a week, they sent her a check for what was in the car.
Yeah.
You get what I'm saying? Busted window, everything. They fixed everything on the car, and she had to pay nothing out of her pocket. But she pays a little bit more a month for her insurance. But I was like, wow, so you ain't got to pay no money? And she's like, no.
Okay. Transparent moment. What I was just talking to P-Dog about, PJ was just sitting there like, Dad, he wasn't at fault. Somebody bumped into him, insurance saying $500. Couldn't get other folks insurance, this, that, and that. And I'm trying to just tell him, hey, listen, you worried about a $500 deductible.
Right.
Me and you can fix that. But my point with him was, you worried this damn bumper might be $2,000.
Right.
That headlight might be damn $600-700.
Right.
So in your mind, this may be because you don't see too much physical damage.
Right. Or
is it like a crack? The part, it will be way more. So when you're riding down the expressway a month or two from now, and you don't see some of the underlying damage, and you went so far out because it'll be okay. Now they're not going to even honor it because it happened that far back, because they do have a window. Why you didn't report this earlier?
Right.
You know what I'm saying? How long that'll be there vary from company to company. But you sitting there blowing this shit off, we're doing it, and then maybe there's some underlying issues that I can't see initially with doing it, and you'll end up paying way more money. And that's the thing I'm sitting there like, you don't get caught up in, what you got to come out of your pocket.
$500.
Exactly.
Right.
$500, but damn, bro, this damn $4,000-5,000 in repairs. They got to get done. Do you have it?
Layla said that headlight costs $1,000 a piece. Let me go over a couple of the statements. Layla said that State Farm canceled her insurance because of her dog. He was a child. I don't know why they can cancel it because of the dogs.
Yeah, they got like $5 that's on the list you can't have on there.
Oh, really?
Yeah, because my insurance guy, he listened to the show. Me and him had a conversation. He explained that pits, Rottweilers, it's like 5 or 6 dogs
that you can't have.
Yeah, you can't. They don't even want you having a property dwelling.
Oh, okay.
Yeah, they don't even want you to even have those, and you got to probably get some kind of another expensive addendum. And if you don't have it, you will find out. God forbid something happens.
She said it cost her a lot of money.
Yeah,
it cost her a lot of money.
I can imagine, but they got a list. They have a list. Of dogs.
I just never heard it. I wanted to go back to that statement.
And I think majority of homeowner policies have that on there.
That's them dogs.
Yes.
Oh wow.
Yes.
Wow.
Majority of homeowners.
I just learned something today. Like
yes.
You can't have something. Like, you gonna tell me what kind of dog I have? Miles? I pay the mortgage on?
Yeah, absolutely.
Oh
because
wow.
At the end of the day, they gonna bite somebody. They know you ain't got the money.
Right.
So what we do?
Insurance, homeowner insurance. Right.
There you go. And so that's the thing. And if you don't, the mortgage has to have insurance on that. So your insurance company drop you. Now you got to go through the mortgage company. They charge you probably 2 or 3 times more the amount because you got to go through that little funky spot. So make sure you do your research. That's why I say always, when you make any kind of decisions, I understand everybody got different money situation. What's this free spirit 5061? Hey, how you doing? Thanks for tuning in. That's a true statement. Appreciate that. Thanks for tuning in. That's on TikTok. We can't get caught up a lot of times just that month we got to pay here each month. I understand everybody got different financial things, but you got to understand when things happen, you got to be realistic about it. So I know we see that, hey, listen, I can't afford that deductible. Like you just said, with doing that, or I can't afford that monthly payment, let me get a higher deductible. you gotta be realistic. If something happens, are you gonna be able to do that?
Mm-hmm.
Or you be riding down expressway with your damn whole door. You see them folks, man, like them Credible Hook done punch their car on the 2023 whatever, and the whole damn bumper caved in. You know, like damn, you know what I'm saying? Cause they don't want.
Always said they kept the check.
I don't even know they went that damn far.
Right.
I don't even know they went
The whole trunk is in the back seat.
on the 2023.
Right.
What the f- is going on? What the hell is going on? Right, like ain't nobody see your ass. This shit just driving and sparks and shit on the expressway.
They kept that check. Yes, they said they kept that check.
Boy.
They said people need to know that what comprehensive insurance covers. So
Absolutely. That's why I say when you're looking at it, you got to make sure you savvy enough to not just be so. And again, reason why people don't because they so focused on what I got to pay a month.
right.
And I get it. I get it. I understand. I need this car. I got to get this house. I got to get it. And I really can't,
Do all this.
do all this.
Right.
I understand.
Right.
And sometimes you can't afford not to skip it.
Uh-huh.
And a lot of times when we have financial mishaps in our life, it's usually due to things that we skip.
Uh-huh.
You know what I'm saying? We got Mr. Charlie to put the lights up 'cause he was cheaper. That whole damn house on damn fire.
Mr. Charlie.
You know what I'm
Charlie
saying?
always cheap.
Got your cousin come and do the damn plumbing.
Right.
Water and shit coming on like the damn sink. You know? You can't call your baby dad for every damn thing. You set your shit on
Sometimes
fire.
you gotta get a professional.
Yeah. You can't afford it, man. Let me tell you something. And I'm speaking from personal experience. Cat I know, man, I ain't gonna say his name, man, but he cool brother, man. I called myself, this about maybe almost 20 years ago. Young guy trying to just save money, getting quotes, shit is high. Get this guy, 'cause you know, you talk to average handyman, it ain't shit they can't do.
Right.
So they ain't gonna, knowing they ain't never did plumbing, knowing they never did electrical, now they may can put a damn doorknob or something on,
Right.
because they work
Change
part-time
locks.
in the apartment,
Right.
right? But they gonna tell you like they can just do everything.
Right.
You like, okay, cool, because you see what, he got some paint on his hands and shit.
His clothes dirty.
Yeah, clothes dirty and stuff. Man, go in there and tear your damn house up. Now you gotta turn around, pay somebody, 2 or 3 times to fix not what you needed at first. We just need to repair.
Mhm.
You gotta get him to fix his shit,
His
then
stuff
get it
too.
back the way you want.
Right.
It,
So
you know.
you're paying double.
So sometimes, like I say, man, listen, I'm speaking out of personal experience. Trying to be Mr. Cheap Dollar. Blew up in my damn face.
And then a lot of people don't realize that the professionals have their own insurance. So if they come in and mess up something in your house, the insurance gonna pay for them to fix it.
You got a cheap landscaping guy, you don't put all that $1,000 in damn the irrigation system to get you a lawn water. Man, you want to go to this guy who ain't got a legitimate company, they run over your shit. They can't afford to fix that.
Right.
Hell, they need that damn money you need to give them.
Right.
So you
Right.
got to be smart about that, man. And all of us have done it. Not I say all,
Yeah.
but a lot of us have done it. And I'm just saying, out of personal experience, some shit you just can't afford not to pay. I
Right.
just want to leave that at that. The next thing we're talking about Insurance 101, getting a better complete understanding of what insurance is. The next facet of insurance we're going to talk about is claim. Remember, guys, if you came in at any time, in the middle of the show, you can always go to Mr. Short Dollar on YouTube and check this whole video out in its whole entirety. So I will recap all the different pieces that we talked about, just exactly talk about at the end of the show. But if you just came in the middle of it, you can always go to Mr. Short Dollar on YouTube. Just Google it, and the channel will pop up and you see this video in its whole entirety, okay? The next facet we're talking about Insurance 101 is claim. A claim is a request made by the policyholder, i.e. you, to the insurance company for the compensation for a covered loss or an event. When an insured event occurs, the policyholder contacts the insured to initiate the claim process. And a thing that I learned a couple of years back, I had a friend of mine works for insurance, doing insurance litigation. She explained to me, because I was just like, because the thought process is that if you have an accident and you're not at fault, it does not affect your insurance. But that's not the case, because just like when you get insurance, they pull your motor vehicle record. They also pull something what's called a clue report, and a clue report lists your insurance claims is either 3 or 5 years. I can't remember, but all claims, regardless if you're at fault or not, regardless you're at fault or not, but as long as you're on a clue report, that's still a ding, regardless, because it's a claim that you did.
It's on motor vehicle.
Well, it's
Or
with insurance.
all insurance?
It's with insurance.
Okay.
The motor vehicle is just speed and accidents and stuff like
But I'm
that.
saying that the clue report is on motor vehicle, it's on all insurances.
Oh, it's gonna be on all. It's gonna be on all. Yeah, just claims and everything like that. But I'm pretty sure car when they put on cars, they ain't gonna worry about that. They're just looking at the claims of that. With doing it. So you gotta just something to just be kind of just thought processing with doing it, because a lot of times people will say, well, listen, guy bumping from behind, I'm finna get paid. And you turn around and get your couple $1,000 check. But then you start looking, damn, my whole premium went up. And you're supposed to have an average, what is it, 4% increase each year or whatever, or what they're doing. But you're like, man, this shit went up 10%. Then they're going up a little bit more. Because these claims were filed, even though you weren't at fault. But just keep it in mind, that clue report is going to be still listed on there. If somebody knows the exact tenure of being on the clue report, please chime in.
Slum Beautiful said it's not supposed to affect your rate if you are not at fault. But that's what the clue report is about,
That's
right?
what the clue report is
Let me
about.
look it up for you and see. Go ahead and finish talking.
And
if they got it,
but again,
they might not have it.
call your insurance company. Call insurance, because what happens is a lot of times your policy goes up and you may think it just went up. It's not gonna go. Like if you get a ticket and then you'll get a notice. Well, this has happened to me, and I think it's kind of common. If you get a ticket today, you may get a letter from your insurance company. Your premium immediately goes up. Like it may just be whatever it goes up. It immediately will go up because it's adjusted because they got that letter from the motor vehicle motor vehicle office, and they'll update it immediately, right? So it may be a week later, your insurance goes up. The clue report is not going to get adjusted until that annual premium. It's not going to adjust to the annual premium. What you about to say?
Clue report, comprehensive loss underwriting exchange.
There you go.
What's on there? What it contains: your name, your date of birth, your policy number, date of loss, type of loss, amount the company paid, description of the covered property address for homeowner's claim, and specific vehicle information for auto claims, payout money, set up a file for a possible claim, formally deny a claim. So this is what companies report, and that's what's in the report. How insurance companies use the clue report. An insurer may request a clue report when you apply for coverage or request a quote. The company uses your claims history or the history of your claims as specific property to decide if it'll offer you coverage or how much you'll pay. Insurance company studies show a relationship between past claims and the claims you report in the future. So basically, it's just like a credit report for insurance.
Yeah, just basic claims on there.
Right.
And here's the deal, like I said, is you update it on the annual side. Not like when you have an accident, you hit somebody and it goes up with that. When you got your annual premium, so you may not even be conscious of doing it. But typically, I think it's 3 or 5 years. I know it's an odd number that it stays on your record with doing it. So I'm just saying, guys, sometimes in the grand scheme of things, it may cost you more. You may okay, I got paid on this particular accident, but in the grand scheme of things, it may cost you more.
In the long run.
In the long run, we're doing it. Because I know they're having my stupid ass. I'm just being very honest with you. We're doing that because the way my policy went up after I got my check, I mean, in a matter of 3 years, hell, I'm paying more, because of that increase. If that hadn't happened. And until she had explained that to me, I didn't really understand that. And she said, hey, listen, and so I think one of them cycles in it, because unfortunately, I got, I've never really been, knock on wood, been at fault. But, sometimes it look like you can't be this damn unlucky. Everybody keep hitting your ass. Why?
Right.
So, and unfortunately, hell, I was. But, in their eyes, they're covering their insurance, so you just got to, take that how it is. But that's one thing I would say. If you have any questions, call your insurance company, have a conversation with them, just find out. You can probably get access to you. I don't know the accessibility they give it. I think that's just something more of actual that's provided to the insurance companies. I don't necessarily know if they get it out publicly to anybody, like you can pull it like your DMV record. I don't know.
They say you ask how long you've done it. They say it collects and reports up to 7 years of auto and personal property claims. So 7 years. So just like your credit report, 7 years.
Yeah.
7 years they report that stuff on there.
Man, I'm just telling people. I know a lot of people be free willing trying to do it. It's not it doesn't go up like your driving record, like getting tickets and stuff like that.
So I'm Slum Beautiful says that even roadside assistance is a claim though.
Yeah, it's a claim, man, and AAA drop me. Because, again, I got the kids on there,
Uh-huh.
got the old lad cars, and they probably damn, I know what's happening.
Right.
Their friends lock their cars in. Hey, we got AAA. Unlocking your friends' cars,
Uh-huh.
your friend car breakdown, you getting their shit towed, and I get a letter in the mail, they not renewing it.
No.
And I know what's going on.
Right. right.
I know what the hell going on.
Right.
So they're saying those particular claims, and they drop me, saying that with the amount of claims, ain't nothing wrong with my shit.
right.
But I know my kids up under
They
there.
use it every chance they get.
Oh, that's one little thing, little girl. Oh, my kids locked in. Don't worry, I got AAA.
I got AAA.
You had AAA, MF, you had AAA. So the other damn conversation I just had with him, my guy.
Right.
MF, you had it. Again, tonight we're talking about.
Gotta look fly with the
Yeah,
AAA.
man.
I don't know what you think of that.
You ain't got it no more. Again, tonight show we're talking about Insurance 101, your complete guide to understanding insurance, going through different facets of insurance. Again, this is a dollar hour, hosted by yours truly, Deontay Burton. If you are coming in the middle of the show, make sure you go to the YouTube channel. Whatever platform you're on, go to Mr. Short Dollar on YouTube. Subscribe to the channel. You can see this whole video in its whole entirety, along with the over 700 videos on the YouTube channel, and also along with the over 150 grant opportunities for any small business owner looking to get assistance with funding. In addition to finance playlist with entrepreneur playlist, a lot of tons of great information on that YouTube channel. So go to Mr. Short Dollar on YouTube, subscribe to the channel when you get there. The next facet is underwriting. The underwriting basically is just the process that insurance companies use to evaluate the risks associated with insuring a particular individual or entity. This assessment helps determine the premium amount and the insurability of the applicant. So a lot of times, especially when you start going into, a lot of times people hear underwriters a lot when they're looking to get loans, especially like a car loan or specifically like a mortgage.
Okay.
We're doing it. Underwriters, they're pretty much, they taking all the data. They're the ones that gather the data from the motor vehicle record, the CLUE report, all this other kind of car information.
Tell you if you're insurable.
If you're insurable, or come up with that price.
Okay.
Those are the ones. Those are the people actually getting it. So that's what it comes with doing it. Usually, sometimes with software and stuff, they can kind of get the agent can probably get a lot of stuff on the surface to say if you can or can't. But when they start going through the process, because they can give you a quote. That's why you have sometimes where you get a quote of $3,000, then it goes to the underwriter. It may come back to $3,200 or something like that because the underwriter was able to maybe pull certain information that wasn't accessible, or maybe a little bit lower. But that's what happened when the underwriter's one that's gathering all these different information, pooling, making an assessment what the premium is going to be. So that's what the underwriter does. The next thing is we're talking about risk pooling. The risk pooling this is a thing that everyone's insurance goes through. That's insurance works on the principle of risk pooling. That's how insurance works, risk pooling, right? They're looking at many individual businesses pay premiums into a shared pool, and when covered losses occurs, the insurance company draws from that pool to compensate the affected policyholders. Like I was explaining earlier.
Right.
Typically, like I say again, you might get certain a lot of different maybe marine, auto, or mortgage insurance places. They actually maybe pooling funds together. They got this big brokerage company. They're putting all that stuff together because my 100,000, lab 100,000, another per 100,000. Now we got $300,000 that we can invest in, put in certain things, and the actual number we get a dividend or a disbursement on certain things or an interest payment. That those amounts when we start looking at the pool, we done our risk assessment, we've had underwriting. Chances are, if this person has a kind of accident, we're looking at they have no DUIs, no tickets, probability of the accident very small, right? Basic car, nothing like that, nothing flashy. Chances of the car getting broken and stolen very small.
Right.
But we still collecting this money, right? And at the end of the day, we're taking all these funds together. We got this same house, we're in the same industry, we're pulling together. Now we got a bigger cat to get in bigger revenues with us on the actual investment side. That's how we're able to cover that pooling part, okay? That was a very funky part about insurance accounting, understanding that side of it in regards to that money, how those funds were set up, and how because we could see honestly if you was in any kind of risk or if you had like a big surplus. Sometimes you may have certain discounts available to you, or you may get an actual a rebate check back from your insurance company, depending on how them investments went on a particular year. So it's something to kind of keep in mind. The next one, this is the key one, right? This is the last one, matter of fact. And this is why I tell parents you should be on your kids by math. This is actuarial science. Guys, I was a finance major. Finance is pretty much, we talk about accounting. Accounting deals with present and past. Finance deals with present and future. some big math base. But the other side of that we had, and that house of that was risk management, was the insurance side, and actuarial sciences. And typically, your actuaries are either three different things. They're either Asian, Indian, or African.
Oh shit. Okay.
Typically, you have people that are actuaries.
Okay.
Asians, Indians, or Africans.
Okay.
Straight walking calculators.
Okay.
And actuarial sciences, the actuarial science involves using statistical and mathematical methods to analyze and calculate insurance risks and premiums. Actuaries play a crucial role in designing insurance policy and determining appropriate premiums. And I say, man, they come out of school making $80,000.
I'm right out of school.
Right out of school. Right out. They don't need you to be sociable. They don't need you to talk. You don't need to sell yourself. They have probably a damn 100% hiring rate. But I'm telling you, dog, like typically, I've seen it. Most of them are Asian, African, or Indian. And I mean, just straight people have strong math bases. Because again, they use that statistical data where they can look at, black, white, age. That's why they get that stuff. You can hear it, and they use the explanation. Typically when most rare cars get stolen out of that zip code, they're the ones that actually calculate to know, hey, that zip code is a risk, is a high risk or whatever. But that's what those actuaries do. They come to that assessment. So we're gonna rehash everything, guys.
I got one question.
Sure.
Question.
Uh-huh.
A couple of statements too. Lion Layla says they look at how many tickets in the last 5 years. Slick says, why do they want all people in the dwelling to have the same insurance company? That's a question she asked.
I think, well, let me answer that. With the insurance company, I think it makes it cheaper. They can offer because they can disperse it. But when you get to when we talk about the pool of it, if you have everyone the same dwelling, I don't know if it even with the same dwelling, but just say if you have a similar coverages, as far as you guys together in the same place, because it reduces the risk because you might share cars, things like that. Having multiple policies, you put more funds into a particular thing so they can make it cheaper.
Okay.
With doing that, typically if you have like homeowners insurance, auto insurance, and things like that, it can be cheaper. Or if you add like one of your children in or something like that, because you add more pool money to the pot. Because remember, like I said, just keeping theory, they're taking your money and putting it into another pot.
Investing in other things.
Exactly. And keep in mind, the way they're investing with other places and just going back into it. So they're adding more to it. We're doing it so they can just lower the cost of certain things they can put out to you. We're doing it because, again, when we start doing the math on the statistical side, we start calculating it, chances are we put more and more things in, I can offer a cheaper product here because the amount of money you're putting in, it wouldn't necessarily be as much for the coverage. Math kind of just changes. The more you put in, it kind of lessen risk and things like that. How you feel about it, Right. How it is how it is. You know what I mean?
Right. Something Beautiful says about the actuary science, they make projections. Yeah. So, yeah, that's it.
Yeah, man. I mean, like, I never met a black like some of those African American. I didn't see too many white guys.
Actuaries.
No. I didn't see too many damn white guys with finance majors. I mean, I ain't seen too many white guys. I damn sure see no black guys.
Yeah.
We're doing it. When I hear a black guy tell me there was a finance major, I was like, whoa. I know, hey, because ain't too many brothers. Because it's so, man, you gotta be so strong in math.
That's what kicked me out of chemical engineering.
Yeah.
I was chemical engineering down my first 2 semesters of college, and it was like I couldn't get the math. Just too much math.
I seen a post one of my old classmates posted. Why would a person need Pythagorean theorem? Why would that be important in your life? And everybody was chiming in, yeah, that stuff ain't necessary. Why would you need it in life? But the problem that you're looking at it, if you know that shit, your life would be a whole lot easier. So you can look at it like, why do I need that? But you're not understanding, like, listen, if you know that shit, your life will be so much easier.
Right.
Because they pay you, you know what I'm saying? I ain't trying to boast, but I get paid this little amount of money. What the hell I got in between my ears now? So that's what I'm saying. Like, a lot of times because we're not familiar with it, we don't push it a lot. But that STEM shit is real, man. I mean, they're underserved, but I mean, just if you got some kind of quantitative background, you got some familiar numbers, that will pay you a lot of damn money. I'm just saying, parents, Like, listen, don't just deflect it. Hey, it ain't needed. Shit, trust me. Somebody need, they will pay you a lot of damn money to do that.
Yeah.
A lot of money. And I know they strictly, I ain't even gonna say 9 to 5. That shit may be 10 to 3.
Mm-hmm.
And man, shit.
No weekends.
Hell no. Hell no, man. Hell no. Hell no, man. Hell no, man.
Yeah.
I seen it that day, man. That's one field, man. That they get paid.
Yeah.
They get paid, man.
And they take those over to those investment bank stuff. Then they get millions of dollars a year.
When you start going to any kind of analytical side of any kind of company or whatever like that,
Mm-hmm.
you know, that's what you're mainly gonna see anyway. African, Asian, and Indian.
Mm-hmm.
Just because the math is needed.
Right.
That's
I mean, you
math
go
is
up Georgia Tech and you ride down the street and with Georgia Tech going on.
needed. That's how you see.
Yeah.
That's how you see most of the Indians, Asians. You know, I mean, again, and what it is just that in the U.S. that's why they push it so much because they're underserved. Not just even with whites. It's just Americans really don't push mathematics. So that's why a lot of times, you know, we have to pull from other countries. Now, those other countries don't push social skills
Right.
like we do and everything. But again, that's a big segment where we kind of like stuck. You remember that?
Who needs Social Security when I'm making $600,000 a year?
Well, you see, you seen how, you know, depending on another industry with the chip shortage, how that affected, you know, just our whole auto industry with doing that. But we don't have the actual, what's the word? Amazon had it, the actual employee capital. Like, you know, we got people that can work, but just can't do the skill level ain't there to do certain jobs. You just can't fill certain jobs because the actual academic side ain't there. But that's a whole nother conversation. We're doing that. People getting their feelings, but like there are a lot of jobs that are available. They got to give them somewhere else because we can't fill them with what we have in certain things, man. So again, tonight we're talking about Insurance 101, your complete guide to understand insurance. Some of the key phrases the key terms that we went over. And remember, guys, go to Mr. Short Dollar on YouTube and you'll be able to see the actual. What's up, Bob? My boy Brandon Ball. That's one of my dogs from Germany. Man, what's happening, B.O.B.?
He still live in Germany?
No. He I know Bob from South Cobb area. But man, me and him was in Germany together. One of my dogs, man.
Lady Line Love, the comments on YouTube, the comments from Instagram do not be on YouTube, but if you go on YouTube and make comments, yeah, the comments still be there.
No, the comments that are on, that's a good question. The comments that are on YouTube are the comments that's coming from the StreamYard, which is Facebook, LinkedIn, and Twitter. That's what, and YouTube. Those are what's on the YouTube feed. So if you go there, you'll see that. Instagram and TikTok has not integrated into StreamYard yet. So we get there. We'll take when they actually do that. That'd be great. But as of right now, and I'm surprised Instagram doesn't do it because Facebook
don't like third-party apps on it. Attached to their apps.
I got it, but I'm just thinking that because Facebook on it. That's why in my mind I was thinking that. But
You'd be surprised. Like,
yeah.
I don't know. They want you to be strictly mobile.
Yeah.
Instagram is strictly mobile. They want you to stay mobile app. That's why you can't go live from a computer with them.
Good point.
Yeah. They want you to stay in your hand.
Yeah, Lab is the man. He knows that. But you know, the terms we went over tonight again with Insurance 101, your complete guide to understand insurance. The first one being policyholder, insured. That's i.e. you, the person that actually get the policy. The second was insured. That's the insurance company. That's the person that's actually going to issue out the insurance. The next one is premium, and the premium is the amount of money that you're going to pay on whatever basis, be it monthly, quarterly, annually, semi-annually, annually, to be insured. The insurance policy is the actual legal contract that the policyholder and the insurance company will have together. Then we have coverage, which refers to the protection provided by the insurance company. Then we have the deductible. The deductible is the initial amount paid by the policyholder, so you can start the whole process to get your coverage started, right? The next one was claim, and the claim is a request made by the policyholder with the insurance company for compensation for the covered loss and event, right? The underwriting is the process that insurance companies have to evaluate the risks associated with insuring a particular individual or business. Risk pooling is insurance company where they work together to actually pool certain people depending on their profile, where they actually have funds put together to match certain people with certain policies they need. Actuarial science, again, that involves the actual statistical mathematical methods used to analyze and calculate certain risks or insurance premiums. listen, guys, we all got to, if we're, not living in a cave, you probably have to have some kind of insurance associated with it. Again, I want to have the whole basis of having the show tonight was to have that conversation with you guys, give over terms. I wish more people called in because I know a lot of y'all got questions, but I do appreciate all y'all that did chime in. But guys, remember, make sure you do proper due diligence and finding out because we just having this conversation tonight. I think a lot of people ask me like, damn, I didn't know that, and it happens all the time. It's not uncommon. And a lot of times, conversations at the barbershop, salon, cigar spot and stuff like that, you're talking to a lot of people that actually participate, but not a lot of people that actually know. So I will say, make sure that you put yourself in front of people that actually answer the question. Your agent might answer some of these questions. Mm-hmm. Look over your policy. Look it over, kind of find out. Don't let the time of the accident be when you find out you do not have renter's insurance.
Right.
Don't let that be the time you find out you don't have roadside. You know what I'm saying? You on the side of the damn road, like, oh, I got it, and you don't damn have it. Your house get broken into, and they won't pay for, the items and stuff was stolen. Lightning strikes your house, and they will not pay for the TVs.
Right.
And it happens all the damn time. So again, I hope the show helped you guys. Anybody before we close it out, open the floor up. I always open the floor up at the end of the show if you got anything that's business related and questions like that, grants or anything like that. We're gonna give you guys a couple minutes to get those in. Let me know if y'all got any question or anything, or open the floodgates. You gotta let me know. If you got a question.
No questions. Leilani says her daughter-in-law was a lawyer. Now she's on the other side agreeing with the judge. She also said, and I don't know if this is a good statement to read, Leilani, but I'm gonna read since she posted it. Now her cucumber is withering. Her cucumber is withering up, and she just bought it yesterday. I don't. What you doing with that cucumber to make it wither up? Okay. Our Slug Beautiful said she dead ass switched agents because of what you said previously. So yeah, she said good shit too. Good stuff. I'm Slug Beautiful said good stuff, guys.
Okay, look. Well,
I appreciate you tuning in.
I appreciate everybody tuning in. Remember, guys, if you came in the middle of the show near the end, feel free. Well, not feel free. Go to Mr. Show on YouTube. Subscribe to the channel. Make sure you subscribe and hit that bell to get a notification each time we upload a new video. But definitely go to the YouTube channel and check out the video in its whole entirety, and also take advantage of all the other great information that is on the YouTube channel. I appreciate you guys. Love you. Thanks for all the love and support. It wasn't pretty smooth.
Yeah.
Last week, man, we were talking about them damn baby daddies and kids and all that don't change your lives, boy. Folks shaking in their boots.
That's right.
So, man, I had a blast tonight, man. Good show, everybody. But again, guys, thanks so much for tuning in. Thanks so much for the love and support. Go to the YouTube channel, subscribe there, and continue to take advantage of all the great information that is on Mr. Short Dollar. I love giving out good information. Love giving out free information. Guys, remember, when I get them calls, this is free.
Them calls
This is free. We start getting other stuff, so take advantage of it. Like we open up, shit, you can get you get the question answered now. Like, these are perfect times to call in and do that. We give them that damn phone, it's a different story.
They might want to pay you for your service.
But if you do later on do have any question or anything like that, I will say this: go to the YouTube channel, put a comment to Line Lady Love question. When you go to the YouTube channel, you can actually input comments and questions. I am very active. I usually take no more than a day or so to get back while I'm checking the feeds or the comments on the YouTube channel to ask if anybody got any questions or anything like that. Okay. But listen, guys, thanks for all the love and support. I appreciate everybody tuning in. If you get a chance, also check out my other YouTube channel, Changing Lives, hosted by yours truly, Deontay Burton. Take care of yourself. Love you all. Be safe, and I'll talk with you soon.